Hello and welcome to This Week in Bitcoin. There's only two news items this week, especially in the ETF world, but nevertheless, it's interesting to take a closer look. News number one is the keen interest in spot Bitcoin ETFs since May. You've seen over $10 billion of inflow into all of the ETF products, and especially a lot of consecutive weeks, or even in one case, almost an consecutive month, where inflows kept happening. Large inflows, days where you have more inflows than outflows, obviously result in a very bullish sentiment by ETF investors. And according to a few studies and comments in the financial media, there are a few reasons as to why this is the case. Reason number one is that people are getting more bullish on Bitcoin and, as we've stated last week, have more long exposures, meaning they're not hedging to the downside. They're seeing a lot of growth opportunities with the spot Bitcoin ETFs and Bitcoin in general, and therefore they don't want to miss out the boat. Bitcoin has also been doing quite well. At the time of recording this, we're hovering again around the $110,000 mark per Bitcoin. And that interest can obviously lead to a lot of investors taking it upon themselves and investing into the ETFs. The other reason, which is more being discussed in the financial news, in the traditional financial news, is that the Fed key interest rates decision we've seen in the last couple of weeks, and we will see in the coming months, play a crucial role for this. Jerome Powell, the Fed chair, is actually very hawkish at this point. He remains steady with the rates, and they want to lower it potentially in July. Lower interest rates means more liquidity, means usually a good indicator for things like growth stocks in the traditional markets or things like Bitcoin, because it has mostly profited from the money printing. In the eyes of the financial news media, this is the main reason people invest into the ETFs. Fair enough. I personally think that they've begun to realize what opportunities they have with Bitcoin in combination with what's going on with these Bitcoin treasury companies, and they're trying to gain exposure in their own world. We all know it's probably better to hold Bitcoin in your own wallet, but hey, if that's what it takes to get institutional people on board and they have their own Bitcoin, which they can play around with, I guess that's a willing sacrifice to make. And the second news are surrounding the BlackRock IBIT ETF, where they are actually making more money with the spot Bitcoin ETF than with their S&P 500 counterpart ETF. Although the S&P 500 index has almost 625 billion in them, and the Bitcoin ETFs only have 75 billion, it seems like it's more attractive for BlackRock to actually push the Bitcoin ETF because they're, at the end of the day, making more bang for their buck. They're getting more fees out of it. At the time of recording, roughly $187 million. Could this also spark new products by ETF issuers like BlackRock and maybe others? Who knows? But for now, the spot Bitcoin ETFs are doing quite well. And with that, we're at the end of This Week in Bitcoin. You know the drill. If you got questions, feedback, or just want to say hello, leave me a comment below, and I look forward to seeing you next week again.